NIO is an interesting electric vehicle designer, manufacturer, and seller based in China. Now, one of the things I've liked about NIO is the battery swap technology, where instead of having to wait for minutes and 20, 30, 40 minutes to charge your electric vehicle, you could go in, have your electric vehicle battery swapped, and you're out of there in as fast as 5 minutes in some cases, which really facilitates the purchases of electric vehicle because I've talked about how consumers have been hesitant to buy electric vehicles primarily because of that large inconvenience of charging and the time it takes to charge when you're charging away from your house. Now, it is convenient if you have a home charging station with the electricity generated through solar power. That makes it very efficient. But for most people in the world, they don't have that. And so this is something that will facilitate increases in sales. NIO recently reported quarterly financial results on June 3rd, so I'm going to review those figures here and update my buy recommendation for NIO stock, let you know if I think it's a buy, hold, or a sell. So on June 3rd, NIO reported that vehicle deliveries came in at 42,100 in Q1 25. That consisted of 27,000 vehicles from its NIO brand and 14,800 vehicles from its new Onvo brand, which is a more affordable brand, lower priced models. Overall, that was a 40% increase in deliveries from Q1 2024. That being said, overall revenue was only up by 18.6% in vehicle sales from the same time last year. So even though overall deliveries were up 40%, actual vehicle revenue was up only 18.6%. And that's due to the fact that those lower priced models from the Onvo brand generate less revenue. And then also, of course, there's been significant price competition in the electrical vehicle space in China. There's been price wars ongoing, and that's not good news for EV investors. The vehicle margin at 10.2% in Q1 2025 was an increase from 9.2% in Q1 2024, but it was less of an increase than I was expecting and many investors were hoping. It was a decline from 13.1% in Q4. So quarter over quarter it was down, year over year it was up. Still, NIO is one of the few electric vehicle companies in the world that's generating a positive margin on every vehicle sold. In fact, there are relatively few vehicles that can do that. Most of them are in China. In the US, it's only Tesla that's generating positive margin on electric vehicle sales. So just to share some history for you, I've never had NIO stock rated as a buy, even though the company has grown very nicely. I've liked their technology, many things to like about the business, but the one thing to dislike has been the massive losses on the bottom line with little improvement. And I'm going to talk a little bit more about that. So I last updated my rating on NIO stock on April 29th. I rated the stock as a hold, and I've had it rated as a hold all year long. And the stock price is down over 15% now in 2025. It's down, I think, something like over 90% from its all-time highs. And I've been warning investors that it's a little too early to invest in NIO stock. If you listened to that recommendation, you would have avoided the disaster of the massive losses on this business. Even though I've acknowledged it's got great prospects for the future, it's investing in very innovative technologies. It's an exciting company, but it's just not very efficient and effective in producing these newer models, in investing in growth. It's costing the company way too much to earn not as much in growth. And here's further evidence of that. Total revenue in the quarter increased year over year to $12 billion, up from $9.9 billion. And that was an increase of 21.5% year over year. But the loss from operations also worsened. It went from losing 5.4 billion to 6.4 billion, even though revenues increased by over 2 billion. So the losses, and this has been consistent with NIO, as it makes more sales, it loses more money on the bottom line. And so it's having to spend too much money to generate that growth. And that's been weighing on the company. But the good news is that the growth continues for NIO. And hopefully they can accelerate this growth. So far in April and May, they've delivered about 24,000 in May and 24,000 in April and 23,000 in May. And they're on track to deliver more robust growth in Q2. Also, they launched the newer brand Firefly. So now that's the third brand they will have under the NIO umbrella. There will be NIO, Onvo, and now Firefly. And the company officially launched and started deliveries of Firefly, a small, smart, high-end electric car, and plans to gradually expand availability to global markets in the near future. The CEO said that since the beginning of the second quarter, we've seen a steady increase in monthly delivery volume. That's great news. And in April, there are new products. The ET9 and Firefly have secured notable market share in the premium executive market and high-end market, respectively. They've also witnessed rising demand for its Onvo L60, and in late May, the new ES6, EC6, ET5, and ET5T started deliveries with all-around upgrades. So based on this, they expect total deliveries for the second quarter to reach between 72 and 75,000, which would be growth of about 25 to 31%. Excellent news that their growth trajectory continues in terms of total delivery numbers. Also, I was happy to see that starting from the second quarter, the company aims to achieve structural improvements in overall cost efficiency with continued progress on operational performance. Hopefully, this means that the company can generate better margins and better overall profitability and reduce those losses on the bottom line. I want to see some losses improve. I want to see that the revenue growth is leading to smaller losses on the bottom line. So, a very exciting company, to be sure. Exciting battery technology. The swap technology is improvement from the charging technology, and that's the main competition, is the fast charging stations that are getting better and better in China. The battery swap technology was much faster than the fast charging, and that gap is shrinking because fast charging technology is improving. Nevertheless, this does facilitate, and this could be one of the reasons why electric vehicle sales in China are actually robust and increasing nicely. Everywhere outside of China, EV sales is flat. It's not growing as quickly or as a percentage of overall car sales. In fact, in the US, less than 1 out of 10 sales are electric vehicles. And that's with all of these government incentives, right? So even with all that incentive and mandate, still less than 1 out of 10 people in the US are choosing an electric vehicle. In China, it's more like 3 or 4 out of 10 people are choosing an electric vehicle. So there's much better demand in China for electric vehicles, and this improving battery technology and lower cost models is really driving growth in this industry, which NIO will benefit from. So is it finally time for me to upgrade NIO stock to a buy? Unfortunately, not yet. I'm excited, most notably about the company's cost efficiency forecast that the CFO told us about. I'm hoping to see better uh, control of the losses on the bottom line, perhaps improvement in the losses on the bottom line, and perhaps then I can upgrade the stock to a buy. But I can't upgrade the stock to a buy if its growth investments will always lead to more losses on the bottom line. At some point, we need to see the company make progress on profitability, and I haven't seen very much evidence of that. And so for that reason, I'm going to keep the stock rated as a hold, but I think this was a good quarter in the right direction for NIO. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.